You know, there's this sort of unwritten rule we all grew up with, this social contract for parents.
I know what you mean.
You work hard, you sacrifice, you send your kid to a good school, and the deal is they get a better life than you did. That's the dream.
It is. It's the engine that drives pretty much every family. You give them the tools, they go build the future.
Exactly. But it feels like that deal is, well, it's breaking down a bit. Not because the education isn't worth it, but the price tag is just moving so much faster than our paychecks.
You've really hit on a crucial point there. There's a specific name for this, It's education inflation.
Okay?
And I want to be really clear, this isn't just everything getting a bit more expensive. This is a very specific trend where education costs are outpacing almost everything else.
So I guess our mission for this deep dive is to unpack that. Why does a degree cost so much more today? And more importantly, what can people actually do about it without drowning in debt?
And honestly, when you look at the numbers, they're pretty shocking.
All right, so let's get that reality check. Just how big is the gap between regular inflation and this education inflation?
It's massive. So you look at your regular stuff, groceries, fuel, things like that. That's going up maybe 5 or 6% a year.
Right, that's what we're used to hearing.
But education costs, they're jumping 10 to 12% every single year.
So double. It's basically double. You're fighting a current that's twice as strong.
Precisely. And to put that into context, education inflation right now is higher than healthcare inflation, which is already high at around 8%.
Wow.
It's even up there with those big spikes we sometimes see in food prices.
But the difference is food prices can come back down. This just keeps going up.
It keeps going. Think about what compounding does at that rate. At 10 or 12%, the total cost of an education doubles every 6 or 7 years.
Wait, say that again. Every 6 years?
Yep. So a course that costs, say, 10 lakh rupees today, by the time a young kid is ready for college, that could easily be 40, maybe even 50 lakh.
That is genuinely terrifying. So what's driving this? Is it just institutions hiking fees because they know parents will pay anything?
You'd think so, but it's a bit more structural than that. I mean, it's not just arbitrary hikes. You have rising salaries for faculty, huge tech upgrades for campuses, better facilities.
And I saw in the notes, this isn't just a local thing, right? There's a higher education price index.
Exactly. This is a global issue. Education costs have gone up faster than consumer prices in 9 of the last 11 years, all over the world.
And what about parents who want to send their kids abroad? That must be a whole other level of financial pain.
That's what we call the double whammy. It hits you twice.
Oh, so?
First, the tuition itself goes up because of that inflation we just talked about. But then second, the value of our own currency often goes down against the dollar or the pound.
So the price is higher, and your money is worth less when you go to pay it.
Right. So a foreign degree that might have been 50 or 60 lakh rupees a few years back, now you're looking at 75 lakh or even over a crore.
That's just a staggering amount of money. How are families even coping?
They're squeezing everything else. I mean, the data on household spending is so telling. The total amount spent on education, it jumped 4.6 times between 2012 and 2024.
4.6 times. What are the actual numbers there?
It went from about 1.8 lakh crore to nearly 8.5 lakh crore.
Whoa.
Families are cutting back on other things because education is seen as, non-negotiable. We saw that 44% of urban parents had fees jump 50 to 80% in just 3 years.
That is just not sustainable. People must be borrowing.
And that's the really scary shift we're seeing. Loans used to be the backup plan. Now, for many, they're the primary plan. Young people are starting their careers with this huge weight of debt.
Okay, so let's talk solutions, because this is a pretty grim picture. It sounds like the old advice, just, put some money in the bank every month, is actually really bad advice here.
It's the single biggest mistake people make. They plan based on regular inflation, that 5 or 6% number. But you can't solve a 12% problem with a 5% solution.
All right, so if I put my money in a savings account that gets me, 7% interest, but the fees are going up by 12%?
You are losing ground every single year. You're actually going backward. Your money is buying less education, not more.
So you have to make your money work harder. You have to take on some risk.
You have to. The solution has to be what we call growth assets. You need to be investing and early in things that have a track record of growing faster than inflation. Things like equities or SIPs.
Because that's the only way to get your returns above that 10 to 12% hurdle rate.
It's the only way the math works. Look, education is still one of the most powerful tools for success. But the economics of it have completely changed. It requires real foresight and planning now, not just saving leftovers.
That's such a key takeaway. You have to be an investor, not just a saver.
Exactly. I always say the goal should be to raise a scholar, not a loan statement.
I love that. Raise a scholar, not a loan statement. That puts it perfectly.
But it does leave us with a final kind of provocative thought, doesn't it? If this trend just keeps going unchecked, are we heading for a world where a quality education becomes a luxury good instead of an opportunity for everyone?
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.